The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
Well, as we took a look at the March WASDE report on Tuesday, by and large, there was not much in the way of changes in that report. The backdrop of tariffs and a stock market that is under heavy pressure here amid recessionary fears and much more. There's still a lot going on as the market's digested some of the updates from USDA. Let's talk about things. Joining us now, Jim McCormick with agmarket.net for our market analysis. Jim, thanks for being with us. And man, oh man, you took a look at the WASDE numbers. You took a look at the market reaction afterwards, and there really wasn't a whole lot to talk about from that USDA report on Tuesday.
No, I tell you what, Jesse, you've nailed it. The government has been known to kick the can down the road on certain reports, and today was definitely one of those days. No changes in the U.S. balance sheet for corn or beans. Some very slight adjustments in the wheat. Interesting enough, they raised the wheat imports by 10 million. I found that a little bit interesting, but then they turned around and cut exports, which kind of makes sense with kind of the tariff battle we're doing. Otherwise, it was a very muted response. And I think the government took a very conservative approach to it. I know the big complaint on Twitter, or X, I guess, as it's known, is they should have raised the export demand on the corn front because exports, no doubt, have been running way ahead of pace compared to they were a year ago. But, you know, when you look at the hurricane of tariff battle that we're seeing, it is really getting ratcheted up as we speak, Jesse. I think the government, USDA officials took more of a conservative approach, saying, hey, look, I don't want to raise it and potentially have to cut it down the line because we are in the midst of a tariff battle. Because if they would have raised demand, and they just really probably could have, it would have given what? It would have given the market a signal that corn needs to go up to ration out that demand. And that's probably the last thing we need right now, because the fact of the matter is we're looking for 95.5 million acres of corn to be planted this upcoming year. And if you happen to put a 50-cent rally on this old crop corn between now and planting, it might entice even more corn acres. Now, if we have a weather problem, this issue, having those extra acres will be good. But if we have trendline yields or anywhere close to trendline yields with 95.5, 96 million acres of corn, you're looking at a carryout back over 2 billion potentially. And mind you, back in September, we were projecting in both August and September, the USDA was projecting a 2 billion, 50 million bushel carryout. And where did SEP corn go? 365. So there is some downward risk if everything goes in, you know, we get big acres and trendline yields. So I think what the government did was probably the pragmatic thing to do, just based on the uncertainty on the export front due to the tariffs.
And I like your approach here and your thought process with this. It seems that even though they did nothing, they still did something essentially to where they kind of held this steady. Because this tariff conversation, I mean, you know, we saw it on Tuesday that the steel and aluminum tariffs on Canada were doubled by President Trump. Stocks have been under heavy pressure to start the week. I mean, there's just a lot of fear in the macros and with the tariffs and more that, to your point, had we seen some big changes, it could have maybe given the wrong signal to the ag markets, Jim.
Well, that's exactly like I said. I mean, right now, you know, the prices, corn prices are definitely off their high made just 10, 15 days ago. We had that meltdown a little over a week ago. But for 9 out of 10 people, the economics still argue probably planting a little bit more corn compared to beans. Now, that's narrowed up a little bit, but the clients I've talked to still arguing at this point, corn is probably the more favorite product to plant. So if you get those bigger acres, you know, we have a potential, you know, then it all comes down to weather, but a trend line yield we will produce. And, you know, as for this tariff, like you said, it's getting ratcheted up very quick. President Trump is now threatening or saying he's going to impose 50% tariffs on steel and aluminum. That is going to have a negative impact on the economy. You know, this is different, in my opinion, Jesse, than it was 6-8 years ago in the first trade war 1.0. That was pretty much us against China for the most part. We are now, you know, he's slapping 20% tariffs on China. China is blocking bean imports from certain countries, from certain exporters, supposedly. There's rumors that China already canceled a couple boatloads of beans. No confirmation of it yet. Now you got what's going on in Mexico seems to be going a little bit better. This Canadian situation gets a lot worse. Canada takes a lot of our ethanol. So if Canada blocks our ethanol, it's going to have a huge impact on the marketplace. And then look what's going on in Europe. He is threatening major tariffs on Europe. He's also talking about pulling out or really constricting investment of, you know, European armies. It is forcing Europe to essentially do more spending. Well, if they are essentially taxing their people more to build up their own army, guess what? Their people are not going to have as much money to spend, and they've been buying a lot of U.S. products and technology. So, the real risk is that we get into a recession that we can't just get out of. And I think, like I said, I think the government took a very conservative approach, and we'll see. We do have the big report at the end of the month. It is a stocks report. That'll give us a little bit better handle on how much grain we've been feeding. That's a big question mark due to all the bird flu. And then we're also going to have that all-important survey of what the farmers saying acreage-wise, and that comes out on March 31st.
Thinking about all of this in front of us here and just the continued uncertainty, and Jim, I think we know that markets don't like uncertainty, and I think that's why we're seeing a lot of these different moves and gyrations going on here. So from a risk management perspective, what should farmers be thinking about here heading into spring planting season right around the corner? They're trying to navigate all this uncertainty. They're making their mind up when it comes to acreage and more. What are some things that folks need to remember right now, Jim?
Well, right now, I think you got to remember or realize, Jesse, we're in a different time than we've been. I mean, you may believe in what President Trump's doing, or you may completely disagree with it. But the reality is, what he's doing is having an impact on our markets, and it's hard telling where this is going to end. So what I've been telling my clients very specifically is you need to know your costs down to the penny if at all possible. So where you're making money and where you're not losing money, or where you're losing money type situation. Then from there, you want to build a marketing plan that I think you don't swing for the fences this year. You try to make sure you're farming in 27 and 28. This may be one of those years you just want to survive more than try to thrive dramatically. But you're also it's a very tough situation in the fact that we're in a very weird situation. Like I said, I believe we're going to plant 95.5 million acres of corn. That is a lot of corn in acreage. And if we have anywhere closer to trendline yields, you're going to bury the U.S. and corn market. But, and there is a big but, if you look at the world supply of old crop corn right now, because of the revisions of last year's crop and everything, your world stocks of exportable supply of corn, Jesse, are the tightest they've been in 25 years. So we do need a big U.S. crop. We do need a big safrinha crop. If one or both stumble, we're going to shift the dynamic the other way, and you could get a pretty good bull run. So I think the two key factors for this year, A, you want to know your break-even points and market grain when you're profitable. B, you also, I think, want to keep a little bit of flexibility in your plan. If you sell a lot of grain, you're that type of person, like to forward sell, consider using options maybe as a re-ownership. On the other hand, if you tend to be a person who wants to sell it when you know you've got it, consider maybe using options as a floor, because these are one of these years that I can see corn easily at 350 in the fall with a very big crop and bad economic situation. On the other hand, we come out of this economy, we get tax cuts, and the economy is roaring by the fall. We happen to have a short crop due to dryness issues, which there are a lot of weather guys worried about it. Yeah. The price of corn could look undervalued. There's just a lot of uncertainty this year, so you kind of want to play at both sides, believe it or not.
Does that same general mindset, maybe with some tweaks, obviously, apply over to the livestock trade as well? Fairly mixed action there. I know tariff concerns have been weighing on cattle and hog futures and more. I mean, does the same general thought process go over to the livestock trade as well, Jim?
It's the same process. I mean, if you look at cattle, we've caught a little bit of a bid here because we import a lot of beef from Canada and Mexico, which is very good if you're a cattle producer, or even hogs. But on the other hand, if you keep driving the price of protein up, just Google it. There's a lot of people are really feeling stretched economically right now in a situation. If you change that psychology and people think they're not going to have a job or worried about their job, they tend not to spend in this market, as the old axiom is in cattle. It's up an escalator and it's down an elevator shaft. And we saw how quick cattle can correct. I think it was just Delta Airlines came out and said they're looking for very poor earnings this next go around, simply because they don't see people out there traveling. And that's always a bad sign when people aren't traveling, because when people travel, it shows them there's confidence in the economy.
Jim, stocks, again, another bad day on Tuesday. Really not a good couple of days for folks' 401ks and more. I mean, you mentioned recession earlier, and we've heard that come out of President Trump's mouth. Just this general macro picture, I think in itself is going to be a big headwind for the commodities and livestock trade. What do you think?
I think you nailed it. I think it is going to be it is going to be a headwind. Right now, I mean, the market is kind of rebalancing of where we're at. These trade wars are very up in the air. President Trump has been very flexible and putting them on, putting them off. And right now, it does definitely feel like we've got a kind of a little bit of a risk-off mentality in the stock market, and that potentially could bleed into the commodities. You know, we're in a situation where you could see the stock market going down, which is offering the argument the Fed ought to cut interest rates, which I think the Fed, that's what the government wants. I think Trump wants the Fed to cut interest rates. We got a lot of debt to refinance. But on the other hand, when you start tariffing products, you know, we start tariffing steel and aluminum from Canada. Think about all the cans, cars, and everything that we use from Canadian steel. That product's going to get 50% more expensive per se, and that will be passed on to the consumer. So the Fed's also got to worry about inflation. So they've got a very tough road to hoe right now between essentially potentially deflationary spiral as well as an inflationary spiral, which what does that give you? Worst case scenario, stagflation.
Absolutely. Jim, I know folks can reach out to you guys at agmarket.net if they want to take a look at your intel, get more information. Real quick, any final thoughts for folks before we close it out?
Be prepared for some volatility, folks. I think you're just seeing the beginning of it. I think right now, between now and the summer, it's going to be very volatile. Like I said, get your break evens figured out and get your orders working. The one thing I'm saying with the volatility, there is going to be opportunities, but those opportunities are fleeting at times.
Always enjoy the perspective. Jim McCormick, agmarket.net. Thanks for joining us on Market Talk today. Have a great week, Jim. We'll talk to you again real soon. Appreciate it.
Thanks for having me on.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.